Good afternoon, everyone, and a very warm welcome to the third and final instalment of the Innovating Farm Finance webinar series. I'm Adam White. I am going to be hosting your questions today. I'm the Head of Agriculture for Barclays UK, responsible for a team of dedicated agricultural specialists across the UK who support many businesses through a range of projects, ranging from diversification, sustainability and growth. I've worked with a wide range of SMEs now for over 17 years, from startups to multinationals, and I'm a passionate supporter of UK agriculture. I mentor a number of agri-tech businesses across the UK, as well as serving as a trustee for the East of England Agricultural Society. Having grown up in Peterborough, if you're local to the area, where you will know that farming is at the heart of the city. And we have a fantastic panel for you this evening. Firstly, Callum Murray, and I'm going to read Callum's description because I need to do it justice. So Callum is currently Head of Agriculture and Food at Innovate UK. He's led substantial publicly funded programmes for applied research in the agri-food sector, and sat on the ex-Whitehall group that secured £160 million of agri-tech strategy in 2013, and then went on to deliver the Agri-Tech Catalyst programme and was established the 4 agri-tech centres across the UK. He was interim challenge director during 2018, jointly responsible for establishing the £90 million industrial strategy transforming food production challenge. And Callum currently sits on DEFRA's external R&D panel, the Agricultural Productivity Task Force, the Agri-Tech E Stakeholder Panel, the AHDB Sustainability Strategy Steering Group, and the LEAF Network Advisory Board. So if you listening to that, I think we all feel inadequate now. So we're very lucky to have Callum on the call. He studied at Aberdeen University, starting his career with the Ministry of Agriculture in 1982. ADAS in East Anglia before joining David Anderson and Co. As a farm business consultant in 1986. He then moved back to his native Scotland to work with SRUC in 1989. Sorry, I've had a power cut here, so I can't read anything. So we're very, very fortunate to have Callum on the call. Thank you very much for joining us, Callum. We've also got Ian Craig, who is a partner at Asits. Ian is the office managing partner in the Perth office, looks after a diverse portfolio of owner-managed businesses with a keen interest in the rural and renewable sectors, and provides accountancy, business advisory and taxation advice. And finally, we've got Julie Warren, who is the Marketing and Partnerships Director of Propel. Julie has a massive range of experience in marketing, having worked for a number of large institutions, and she now leads marketing for Propel, who are an innovative fintech supporting businesses with asset financing. Julie does come from a farming background, so if you get 5 minutes to have a pint with her, she'll tell you all about that. And therefore, she's personally interested in supporting a thriving UK agricultural sector as well. So those are our guests. So welcome all to the call, and I'm sure we'll have lots of questions. We will open that up for a discussion in a moment. If you've got any questions at any time, type them into the box at the foot of your screen. They will then come through live to me, and I will direct them to the panel. And this webinar is due to last for about an hour, and afterwards it will be available on demand, and you'll get an email to let you know when the recording is ready for viewing. So we'll get straight into questions because we've got about 55 minutes left. And Callum, given your introduction, I have to come to you first with the question that's been asked ahead of the webinar, but this is around innovation and invention. And if necessity is the mother of invention, how do you see novel technologies and new innovation helping farmers to not only survive, but grow?
Well, thanks for that, Adam. And I'm slightly embarrassed about the length of that introduction. It's very kind of you to get all of that out. I think the key thing from my perspective is to recognize that, first of all, we've got to really acknowledge that every single business has to grow to survive. Now, I don't mean that in the sense that every business has to get physically bigger, but every business has to own more of their business at the end of this year than they did last year. Otherwise, things are falling away from us. Things aren't going well. So in that context, thinking about investments into innovation, they have to make sense and be adding value. You can't simply take them on board and bring costs into the system, be that from operational running costs or depreciation, whatever it has to be delivering something that is going to help with driving productivity at the end of the day. Now, what I'm talking about in terms of productivity is driving, to an extent, resource use efficiency, getting more from less, or achieving the same, getting the same level of output from less, or getting enhanced productivity from the commitments that you've made. So what they need to be doing really is to be taking us to the point where we're increasing revenues, adding value, diversifying income streams. All of the above have to be considered when thinking about these innovations. In some instances, it could very well be about safeguarding income streams, and I'll just explain that in a moment. But the kind of technologies that we're talking about here is all sorts of things to do with, let's say, monitoring livestock health or estrus detection, thinking about genomics, thinking about data management, thinking about novel production systems, thinking about robotics and autonomous systems, all of these things, all kinds of different data management and spectral imaging and so on. There's a huge array of opportunities here. But crucially, businesses need to look and understand where the productivity gains are going to be made so that the investments they target are geared towards driving that productivity gain. So there's not an answer to say this investment's going to do the job for you or that investment's going to do the job for someone else. It's what's going to make sense on your own particular business that's going to allow you to grow your balance sheet and know more at the end of this year than you did last.
Excellent. Thanks, Callum. And I guess combining your agricultural experience with your experience in innovation, I think one of the things that we've certainly seen through the questions is some of the challenges of doing that, of being a farmer, worrying about almost staying running on the treadmill whilst also carrying some weights, it feels like sometimes. But how do you see that balance? How do you, as a farmer, then start to practically make that happen?
Listen, I absolutely get it, and I don't for 1 minute want to suggest that farmers and growers need to be working harder. The pressure and the strain on businesses is just enormous. So waving a magic wand is not something I can do. I think I'm going to sound a little bit boring here, and I know it's very old hat, but starting to just think about measuring variance on your farm, understanding what could be working better, what's not working better. I'm sure a lot of our listeners will be well aware of the areas that could potentially be enhanced, could probably be tuned in to give them a better return. And understanding that, taking close notice of that, and not necessarily going out and investing in the latest technology until such time as you've looked at the data that exists on your farm that you already have to hand. Really boring. That could be having a properly analyzed cash book, a manual cash book. It could be just thinking about the calving interval that you've got on farm. It could be about thinking where the individual fields are not responding in the way that they should. But just tightening up on management, if time permits, is clearly what has to happen. At the end of the day, the expression I was used is that data analysis is high value paperwork. It is going to pay. So I'm sorry it's boring, but it needs to be done.
Yeah, I'm glad you said that, Callum. Most things in life are boring, and they must be done, and that's a good starting point where anybody can go to. So that's brilliant. Thank you very much. So Ian, coming to you, because everybody likes to talk about tax and some of the challenges that come with that, and particularly for a sector that looks at tax through possibly partnerships. When rural businesses are looking to diversify, to grow, to do something different, are there any tax issues that need to be considered and built into that plan?
Yeah, thanks, Adam. And I think a lot of the traditional farming businesses are there's all the different taxes need to be taken into account. And even things like VAT. Your typical farming business is usually in a sort of VAT refund situation, but as soon as they look at a diversified opportunity to grow the business, and if that's sort of business to consumer type type of venture, then typically you turn into a sort of VAT payment situation. So it's just understanding, when you do look at other projects, what's the sort of VAT liabilities and the sort of cash flow around that? How do you fix your pricing? And also things like the sort of tax relief on the investment. It's the things that you're investing into going to get the same tax relief as maybe plant and machinery would in a traditional farming situation. We've seen a lot of investment in the last few years in the sort of tourism and leisure market, furnished holiday letting, all that sort of stuff. Some fairly chunky investment, but they don't all necessarily get capital allowances and immediate income tax relief. So just understanding what you're investing and the tax relief that's coming. And I suppose the other one, from a sort of capital tax planning point of view, we have quite a farmer-friendly inheritance tax, capital tax relief system in the UK. And a typical farming business, provided it's properly structured, should qualify for the reliefs. But as soon as you drop in a sort of diversified activity that's away from farming, you just need to be sure that those activities, don't do anything to jeopardize the relief for the farming business. And if they do, is there any sort of structuring that can be done to move these, assets that might taint the position into a different entity and things like that. So yeah, tax is definitely sometimes it switches people off. I'm well aware, but when you're looking at growing your business and strengthening your balance sheet, it's definitely it's ultimately a business cost that needs to be considered.
Brilliant. So I think what we've heard so far then is start small, start simple, do the basics well, in terms of looking at your opportunities to sweat your assets, but speak to professionals whilst you're doing that to make sure you don't jeopardize any of the current opportunities, and go speak to an accountant who knows those things and can help there. So Julie, I'm going to come to you because there's quite a number of questions around our old favourite topic of planning permission changes and the challenges of those. Now, Propeller financed a number of diversification projects for farmers, and have you seen any examples from customers that you've supported in successfully negotiating those planning challenges?
Thank you. Yes, it's. I think that's quite a hot topic that we, often hear from farmers that are looking to diversify, and they've found themselves going round and round. I guess if we watch Clarkson's Farm and other things, it seems like an impossible challenge. I think we've seen some really good examples, Adam, from farmers that have turned, redundant buildings. I'm thinking of one into a gym. We've seen distilleries on sites. I've seen one that's turned a lake into a water park. And I think the common theme that we're certainly coming through, particularly with farmers that have kind of had an initial meeting themselves and felt that they were going around in circles, is have an initial meeting with one of your local or one of the national rural planning consultants. That often they're often made up of ex-local planners, special agricultural planners. I think with a lot of people, if you go to them in the early stages, even if it's an advice only on helping you to navigate where you may go, but certainly we've seen several businesses that have thought they wouldn't be able to make any progress. I think the hard bit is deciding the right time to go and speak to somebody. Obviously, if you've gone round and round in circles, I was speaking to somebody the other day that had a farm shop that was, trying to get an agricultural license, and they'd gone round in circles for 6 months and then decided to go and get some specialist advice, which moved it along fairly quickly. So I'm certainly not going to recommend anybody. But I think I would just Google your local, rural planning consultants. The chances are they've probably seen somebody trying to do what you're doing. They'll probably know the local planners. I think we've seen questions around people with redundant woodland. on farms that wanted to turn it into activity centres and tree climbing things and glamping pods. And there's certainly people out there that have achieved that. And I know with all of these areas, they come with specialist restrictions and, protected woodland or all sorts of other things. But I would say go and seek some specialist advice. You certainly probably wouldn't try and buy a house without, having a lawyer to help you along the way. It may cost you a little bit. One of the questions that we quite often get is, but I haven't got the money to pay for the planners. And certainly we've had situations where we've helped farmers along that way. If you've potentially got assets, you may be able to refinance against those to raise some cash to help you with that bit. So I think from what we've seen, my advice would be to certainly seek out an initial conversation with a rural planning consultant, and they may tell you early doors that you haven't got a lot of chance, or they may be able to help you navigate along the way.
Excellent. And Julie, there's a question around, obviously we talk about diversification a lot, and I think you make a really good point. Is I think most people think agriculture is simple. My experience of working across multiple businesses, agriculture is very complicated in terms of structures, and Ian, I'm sure you'll see that, and hence why that's your specialism. And I think you make a really important point about most professionals have seen these things before. So that there's a question, and I'll come, Julie, to you, and then Callum, perhaps get your thoughts. But how do well, Julie, I suppose to you, are you seeing finance for traditional agricultural improvement? So is it just diversification and really cool projects, or is it do Propel see, and I can answer this as well, do Propel see lots of sort of improving the traditional farming business side as well?
Yeah, absolutely. And I can think of several recent examples where a chicken farm where we financed automated feeders, going from the sort of the grain store outside to bringing the food into the chicken farm, a fruit farm that had automated sorters on there. I think the commonality with those businesses are they're trying to improve efficiency. They're trying to deal with increasing costs of the energy, the electricity that they're using, and potentially trying to look at how they can manage either rising staff costs or shortages of staff. And I think we've seen sort of post-COVID with a lot of farms having issues with with overseas farm workers coming. So I think there's an awful lot of people looking at efficiencies of technology. Some of the agricultural technology that's coming in is absolutely enormous. One of the questions that we often get is, this is quite a specialist bit of kit. Would you lend us money to buy that? And the answer is, we would always look at the business owner, the piece of kit that you're buying and where you're buying it from. But certainly I think we funded an awful lot of specialist technology to go into farms recently, and I'm ever amazed by farmers look at innovative ways. One of the recent ones we saw was drones for a hillside sheep farmer, and he'd worked out that he could actually use drones to find out where his flock were, and things like that. So there's loads of really exciting things going on. I guess it's kind of seeking out those ideas, and I think with everybody, and I've run my own business before, you get almost sort of stuck in the day to day. I think Callum was sort of saying, you're on the treadmill of running the business, and it's 11 o'clock at night by the time you actually get in with wet feet and wet clothes to sit down to have something to eat. It's very hard to kind of get outside of that. But possibly in a good way, there's a lot of very interesting events that go on. Adam, I know you do some of them within your Barclays Eagle Labs, and certainly some of the people that we've spoken to have got some great ideas by going to some agricultural sort of diversification seminars and listening to other people and speaking to other people.
Yeah. Okay. Thanks, Julian. And Callum, to bring it to you from a slightly different perspective, and I've been involved in a number of calls looking at sort of R&D. Are there opportunities, or have you seen opportunities for traditional farming practices to improve? Is there access to R&D that you'd highlight?
Yeah, sure. Thanks, Adam. Absolutely, and I think we're very fortunate actually just now that DEFRA have committed well north of £200 million to what we call the Farming Innovation Programme, and that has a number of strands of support available for farmers, specifically targeting farm businesses, and it's money that's being made available at a range of different levels. It comes in. To put things in a way that I hope our listeners can understand, that first of all, there's a level of grant that's targeting exploring ideas and helping farmers to develop a team. These are called research starter grants, and they're very much about a relatively low level of commitment. 28 to 56,000 pounds of cost. But bear in mind, the grants that relate to that are up to about 70%. So in fact, it's not a 28 to 56,000 pound cost to the farm business to do it. But as I say, that level of grant is all about exploring an idea and developing the team to take things forward. But R&D starts to get very expensive very quickly. So when I said that it's a relatively low level of cost at 28 to 56,000, the next level up is when we start getting to the point about thinking about the checking if an idea works in practice, feasibility studies, which are operating and providing grants at much higher levels, 200 to 500,000 pounds. Now, again, that sounds like an enormous amount of money, but the way in which the grant support is structured is that research organizations, like, for example, the agri-tech centres, can work with partners, and they can claim virtually 100% of half of that cost. So if it was a £250,000 project, for example, it's permissible for the research organisation to claim £125,000 of that £250,000, and that's all paid at 100% grant. The rest of the money is supported at or around 70% grant. And if that's split between, let's say, an upstream supplier, a machinery manufacturer, an engineering firm, whatever it happens to be, if they carry some of the costs and the farm business carries some of the costs, then very quickly you get to the point where you see that a £250,000 feasibility study is grant aided to the tune of something around about 200,000 of that 250. So it is a way that businesses can start to bring ideas together, work with real research specialists, and have the public purse fundamentally underpin a huge chunk of that R&D investment. So it's a critically important area, but it needs the buy-in of farmers and growers and foresters, as it happens, to come forward with the ideas, engage, and start to identify the challenges and opportunities that go with that research environment.
No. And Callum, I know, so from a Barclays perspective, our Eagle Labs is working hard to try and put those agri-tech businesses together with farmers, because I think that's the gap at the minute, is having that conversation, and that research and development doesn't go overseas or doesn't focus on a problem that perhaps doesn't exist. Is there any ways that Innovate UK are helping to make that happen, or would you suggest going through the agri-tech centres?
Yeah, well, absolutely. You've mentioned the agri-tech centres, whether it's Agri-EPI on engineering, or crop health and protection on, obviously, in crop, or CL, which looks at livestock innovation, and indeed Agrimetrics, which is working on data management. So they're all there and part of the ecosystem. But you're right, Adam, that trying to help farmers build consortium is a critical component, because not everybody knows who they should be talking to get that advice. Innovate UK, which is part of UKRI, the UK's research organisation and agency, if you like, we have as part of our family something called the Knowledge Transfer Network. And the Knowledge Transfer Network is there to help support farmers and other businesses in and across multiple sectors, but in this case, certainly agriculture and food, to build the consortium, to get them together. So we find players here in the UK that can genuinely help support that whole R&D basis. And it's important to note that the funding that's going into all of these proposals is money that's coming from the public purse, the UK taxpayers paying for all of this. And we're not in the market of giving grant UK taxpayer money to overseas companies and engagements. The people that benefit from the grant are UK registered companies. So building a consortium that tackles the investment that's going to solve real world problems for farmers and growers here in the UK and through FIP, particularly in England, then that's what we want to do so that we can indeed increase productivity. And I should say, benefit the environment in the process.
And that's great. That's a great message for people on this webinar to hear, because I think there is a real opportunity and pot there of businesses and funding that can potentially help with those challenges.
Absolutely.
We've got a number of questions, so I'll go into those. But just as a reminder, if you would like to ask a question, just type them into the box at the foot of your screen, and I'll keep directing them and keep an eye on them whilst we're live. So Ian, I'm going to come to you now. We've talked a little bit about diversification and some of the different directions that farms are going to support income. What are some of the succession issues that arise there, and what's the best way to deal with those?
Yeah, so I think typically, in farm businesses that have sort of gone into different projects, some of the things that I often come up against is the project started small, they've just been led by the market, and then they've realised there's a local demand, whether it's a farm shop that's grown and become a bit bigger. They've then sought funding to maybe expand a bit, and typically the security for that project has been underpinned by the sort of the farming assets. Meantime, the diversified project may be in a separate legal entity, and of course, then once it continues to grow, it generates cash. The cash generating business is perhaps in a different, or the debt's in a different place from the actual cash generator. So. And that works fine for a while, but then if the rural business next generation comes through, and one of the next generation want to farm, another one wants to sort of carry on with the diversified enterprise, then you may need to kind of restructure it and refinance it so that the businesses are kind of looked at more independently, and that's quite difficult in a rural setting, because often the diversified project is quite heavily linked with the farming business, and typically what happens in the early years, a lot of costs kind of just get lost in terms of how it's all seen as one business. But then when the next generation comes through, and it's like, right, well, you get on with the farming, and the other one you get on with that business. I think just a bit more financial discipline in terms of how costs are monitored and coded, and so that you're actually looking at the true picture of financial reports and how the business is actually doing. Because sometimes when it's all kind of closely linked together, you maybe don't always look at the real costs of operating. So. Just a bit of disciplined financial reporting generally is a positive thing, so you can kind of monitor how it's actually performing.
Excellent, thanks, Ian. Callum, I've got a question I think is going to go to you, and this is from Richard Deakin. So I think one of the things that perhaps as a farming industry we don't think about is diversification into alternative food production. And I've recently spoken to a number of vertical farmers who are on a journey in terms of where that would go in the next 30 years, and these are long-term investments. What about something like diversification into aquaponics on a large scale? Is that something that would be funded through R&D? What are the best ways, and what would your advice be around that?
Yeah, absolutely. Thanks, Adam, and thanks to the person asking the question. Yeah, what we recognise, we undertook a little bit of a study in thinking about the future economy and what we need to consider around the kinds of systems, the kind of production systems that we need to consider that maybe aren't associated with traditional land-based systems. So one of the competitions that happens to be open just now and remains open until I think the 19th of April is a competition called Novel Low Emission Food Production Systems. And this is all about trying to target those production systems that are going to deliver novel solutions, deliver novel proteins, deliver novel ways of bringing food to the table, if you like. And this particular project is this particular competition and funding round is going to support projects that will run for 6 to 24 months. We've got a total of about 13 to 16 million pounds available to support this novel low emission food production system. And the projects that can be funded can be anything from about £200,000 in total cost up to about £1 million in total cost. Now, clearly, a lot of farm businesses are not going to be able to tackle that themselves on farm, but working with upchain suppliers, with downstream food processors, with the multiples, maybe building a consortium together to try and think about what they can do. And aquaponics, in tackling the overall remit of low emissions, is something that we're absolutely prepared to do. There's another competition that's just closed that's been all about the creation of biofortified and functional foods that require the raw materials from primary producers, farmers and growers. So all of these support mechanisms are designed to try and integrate the whole supply chain across the food industry to make sure that we are fit for purpose in the future and that we are considering all these other areas that that fundamentally need some R&D just now to make them happen as we go forward.
Brilliant. I think that's a real takeaway for everybody on the webinar and everybody listening afterwards is how much funding is potentially available out there. And I think whenever I speak to farmers, one of our concerns is around food security. And if we think about statistics for how much food do we actually consume that we produce in the UK is anywhere between 50 and 60%. It's somewhere around that mark, and it has been for a little while. But actually, there are some of those alternative protein options that can help in terms of improving food security. And I think that's where that can help farmers. So yeah, that's great, Callum, and thank you for that. There's one I'm desperate to answer, and I know I'm the host and I'm not supposed to, but I'm going to, and then we'll go to another one. So Anthony, this is your question, and Callum, Julian, you may have some thoughts on this. So farming on the fringes of Dartmoor, I'm very concerned about the future of upland farmers. How can they increase productivity gains, mainly livestock, and decrease input costs, mainly fertilizer, to raise profitability, to allow them to continue in the industry after the loss of the SFP? And I guess, Anthony, from your title, hopefully I'm going to give the right answer. But I think one of the things that we're certainly starting to see is a move towards regenerative farming, so low inputs, reducing inputs. And I think but one of the interesting things, we talk a lot about carbon, we talk a lot about nitrate, we talk a lot about methane runoffs. If we looked at that as cash, as farmers, we'd be all over it, but we don't. And I think this is now in an environment in which you can start to do that, and you can start to look at, actually, if I'm putting a chemical onto this, do I need to? Is that the best system? Is that the best way of doing it? I think one of the concerns is probably around how do you finance that kind of curve towards moving away from a high input system into regenerative. So Julie, I'll come to you, and then perhaps I can answer it back. But is there any Are there things that Propel can do in terms of helping to release cash on farms? If it's not, is there any sort of lending routes that you can go in terms of kit or anything that's on farm?
So we often get the have the conversation with farmers that have lots of kit that they own outright, but are looking to potentially release cash out of those to invest into other areas and refinance against kit that they already own is definitely something that we look at. So I think a lot of people are familiar with us sort of funding. You buy the kit and fairly simultaneously within a month or two you pass that over to get 100% finance to a company like ours. But actually we will look at older kit that a farmer owns, and regularly we do that, particularly if those looking to diversify, or if they're looking at changing the way that they're farming to invest in new kit. We'll certainly look at existing kit that they've got to see if we can release some cash flow for them out of that to invest in other areas, and often that works quite well. Normally what I'd say is to do that in conjunction with their accountant. There's obviously various schemes that are out there at the moment in terms of, we know we're coming to the end of the super deduction and moving over to the full expensing. I'm no accountant, Ian is. So we would normally say, this is what we could do for you, but please go away and have a conversation with your accountant, because there's a changing landscape in terms of the tax allocation to buying new assets. I think, Ian, anything you would add on that?
Yeah, I mean the budget just last week there or week before was talking about full expensing, which is a bit of a headline grabber, because actually for most businesses, we've had this annual investment allowance of £1 million. We've had it for a few years, and for your typical rural business, while some will spend more than £1 million in any 1 year, not many do. And okay, we don't have the super deduction now for limited companies, but we have the full expensing. So the full expensing against a higher rate of corporation tax at 25% actually takes you to the same place as 130% super deduction at a lower rate. So it's still quite a good incentive, I guess, to invest. I think one of the things on the sort of so it was the environmental investment that I think that needs to be accelerated, and I don't know if Callum could probably comment on this as well, is that we've seen loads of investment in renewables in the last sort of 10-15 years, which were all incentivized by the feed-in tariff and RHI, and that's all dried up. And any projects that my client base look at now, unless you have an on-farm need for energy, it makes it quite difficult to stack up the numbers on a sort of renewable investment. And whereas you didn't need that demand in the old world where it was incentivized. So on-farm storage of energy seems an obvious route, and would like to see that kind of made more commercially viable, I think, because if it's an option, it's only going to go one way. The demands, the supply chain is going to demand that the farmers are more, what they're already asking about carbon footprint, who you sell your potatoes to, what is the primary producer's carbon footprint. So, and that bar is only going to get higher. So I think if we can get a bit of investment, as an industry into sort of storage, then I think farmers will be quick to embrace it if it's viable to have on their farms. I just think at the moment it just the bar's too high in terms of the cost, and I think that's something that would attract spend if you do the sums, and actually on a sort of 10-year horizon you can show that your fixed costs are going to come down if you can store your own energy and use it to fuel your own equipment. That seems a fairly obvious one, and satisfy the the environmental demands at the same time.
And just to stay with that thread, Ian, so we've got a question from James and focused on your renewables side. So this is around large solar energy schemes, typically let to developers or hedge funds. So they're supported by big money, and obviously they're huge infrastructure projects. Is there a space for farmers? Is there a potential return for farmers at the moment to self-fund some of those types of large solar projects? Is that something farmers should look at as groups? Have you seen any examples of where that's worked for farms?
Not so far. I mean, the more of what I'm seeing is, the farmer landowner's approach by a developer to put a solar array on their land, and a sort of lease arrangement is what I'm seeing. It's quite an interesting concept, I guess, to look at something like that. If I think with solar and the way that electricity prices have been over this last winter, the payback's looking pretty favourable. Although when electricity price drops, it sort of looks less favourable. But I guess any investment like that, you've got to take probably a 10 to 15 year view. But yeah, it's something that if you can get the power to the farms in a sort of close proximity in certain areas, potato growing, veg growing that needs a lot of cold storage, flower growing for whatever, then yeah, it's possibly something that could might be worth exploring. Okay. And there's other things that potentially might work. I haven't actually looked at EIS funding, whether they be sort of income tax reliefs for a sort of cooperative type model in that situation. So that might be maybe something worth considering at a larger scale. I mean, I think typically in a farm it tends to be putting them on roofs of their existing buildings and things like that.
It's self-reliance, yeah, rather than breathe in. Excellent. There's and Anthony, I'm going to drop you an email afterwards because you've asked a few more questions. I think you're a man that I'd love to have a conversation with, so I'll follow up with you separately. But I think there's a common theme there just around groups and working together as farmers. I guess, Callum, your experience outside of farming, is that something that you quite often see in Innovate, where groups of people come together for a single project?
Yeah, absolutely. But we're very fortunate to work in an environment where we're because Innovate UK supports all sectors of industry across the UK, whether it's the automotive industry, the aerospace industry, the energy sector, the health and care. The opportunity to collaborate and to work with a number of different potential partners is very real. What we've tried to do internally is pull together a structure within the organization that focuses in on real challenges. Of course, the challenge of net zero is one that pervades all of society. Everyone's talking about it. It's all in the headlines. And we've got a dedicated domain, as we call it, that's bringing together all those areas that are going to impact on the ability of the UK to meet our net zero targets and obligations. So we try and work as closely as we can in cross-sectoral funding opportunities. The energy sector clearly has a role to play in this. I've had discussions with colleagues when we start to think about biomass, about the capture and conversion of gas from biomass plants. Clearly, it's methane that's being generated, hugely impactful from a greenhouse gas perspective. But if we're taking the capture of that raw energy and converting it into something less impactful from a negative perspective, in this case, carbon dioxide, someone's dog going, we're helping solve the challenge, or at least mitigate against the risk. So all of this is stuff that we try to do. We try to engage. We've got an ecosystem that brings together a number of specialist institutions that we term catapults, that are looking at satellite applications. It's looking at offshore wind generation. It's looking at cell and gene therapy. That's looking at all manner of things. So the point I'm trying to make is that we recognize that a lot of other sectors will have potential solutions for our sector, but they don't yet know it. And maybe we haven't articulated the challenges that we've got to those that might have the solutions. So it's imperative that we all talk together and share our common knowledge. So that, I think, is important. But one thing I'm going to perhaps, if I may, Adam, just a little bit antagonize those that are in the finance world. That, you know, in terms of realizing cash and funding investments, I go back to my original comment that businesses have to be in a position of showing that they are growing to survive. And debt and interest manifests itself in a rental equivalent for the farm. And understanding the impact of the investment that you're making and the kind of return you're going to get is kind of key to surviving. So some of the questions that have come in around how you improve and maintain profitability in the absence of SFP and so on, it's looking at all of these costs and understanding where you're in a position to add value, increase output, and reduce cost. And that, I have to say, also includes interest, particularly the way interest rates are going and have gone today. So, you know, it's back to the boring stuff, but it's managing your business and being more intensive in your management of your business, not necessarily working physically harder.
I think
that's.
Sorry, Adam.
Go on, Julie. You first.
No, I was just going to say I'd seen a question that we had in before, which was along those sort of lines. It was talking about, you know, what help is there for farmers with seasonal cash flows, and I was just going to say, you know, speak to your lender, ask your lender what's available. We do a huge amount with farmers that have got very seasonal businesses, whether they're, you know, fruit and veg growers or they're doing rapeseed, and we will, you know, as far as we can structure repayments around the seasonality of them. I'm amazed how, you know, that we're not asked that often for that kind of help. But I think coming to Callum's point, it's about understanding your cash flows, your ins and your outs, and actually having a really honest and transparent conversation with your finance partner, whether it's your bank or your asset finance lender or something else, because genuinely, and I think from our perspective, we understand those you know, those pains around the seasonality. And certainly I can think, you know, we've helped Christmas tree you know, producer. Clearly your income's going to be in a pretty tight window, and you know, we can work around that with seasonal payments, whether we move from monthly to quarterly, or, you know, even 6 monthly in some places, or something bespoke. Now, not all lenders will take the time to understand, or potentially, you know, go and speak to a broker that will know the lenders that will work with you to make something fit you. But I think you'd probably agree with that, Adam, as well.
Absolutely, and I'd say that yeah, I think there's been some nervousness with interest rates changing, because it was a lot easier to make an investment decision when rates were at 0.1, 0.5%. Now they're at 4.25% today. That sometimes adds a little bit nervousness. But I think, to your point, Callum, it's making those assessments, using the professionals, having a full plan for what that looks like. And then, to your point, Julie, there is flexibility out there. And if you don't ask, you don't get, which is something that sectors are very good at asking. And generally, we do everything we can to possibly make it fit with the particular seasonality of that business. So I think there's a real theme there in terms of understanding your baseline, where do you move forwards, and being confident to make an investment decision, whether it's at 4.25 or 0.1. I'm conscious of time. We haven't got long left, but there's a really good question for Joey, from Joey DeWitt, and I probably said that wrong, Joey, so probably so apologies if I have. But I'm going to ask this to everybody just to go round. I think this is a really good one. Now we've talked about some of the longer term opportunities. What are some of the low hanging fruits you see in most farms that could be improved or addressed to improve profits and financial viability? Great webinar, much appreciated. Thanks, Joey. Ian, I'm going to come to you first. What's some of the low hanging fruit that you see when you're talking to farms and businesses?
Well, I think a lot of it, there's sort of two parts to your sort of P&L account. Ultimately, there's a sort of line down to your gross margin, which you can kind of control, whether that's yield or lambing percentage or calving percentage or whatever. And I suppose it's getting some benchmarking data to know where you are. Farmers need to be aware of where they are in their peer group and their local area. And there has been over the years lots of these benchmarks. You just need to be sure that the benchmarking group you're with, they're true comparisons to your business. And that could be quite telling as to how your technical performance affects your gross margin. And I suppose below the gross margin line, it's sort of fixed costs. And, there's still an element, quite a strong element of the ag industry that has machinery costs way and above what they actually perhaps have relative to their output. And I guess part of that is just in recent years anyway, it's just been this huge upturn in costs of capital investment. I mean, it's just been, inflation has been around for a few years now. So machinery replacement is expensive, get all that. But in terms of innovation, it's not happening in a massive way, but we're seeing a bit of cooperation, buying a combine between different businesses, a recharge of its costs between perhaps 3 different farmers, a bit more sharing equipment, things like that. So yeah, there's no magic bullet. But I think first and foremost, knowing where you are, I'm making the best out of the resources that I have, and unless you kind of look outside and get a bit of an outside view on that, it's very hard to make changes.
So we all love a bit of shiny kit, Ian, but think about it before you buy it. And secondly, work together. If you can share it, then even better. I'll come to you, Julie, and then Callum to you. Julie, anything you see in terms of
So I think we're seeing a lot more farmers that are looking to borrow to buy new kit. I think there was certainly a lot of farmers that were very sort of cash. If I had the cash, I'd buy it. But now actually I'm looking at my cash flows and looking at, if I have a new bit of kit, what can that, what economies of scale can that give me? What can I do with that kit? Can I do a lot more? Can I save on wages, costs? So, I think farmers are getting more open to looking at, the costs versus what they can actually do with the kit. I'm not necessarily saying it's a low-hanging fruit, but certainly we've had some really interesting conversations with farmers that have looked at the assets that they've got on their farm, be that way of land, buildings, whatever, and thought about what they could do, or in collaboration with another partner as well, be that a farm shop, big indoor children's play centre. We've certainly seen farmers that have been approached from other businesses about developing stuff in collaboration with them. So there's an awful lot of people that are looking for land and buildings. Again, I know you come back to the whole planning discussion, but I think there's a lot of collaboration opportunities out there. And get out to some of these shows. There's a lot of shows out there where they're talking about diversification opportunities for farmers or within other industries. And I think certainly I find it quite invigorating to mix with people with lots of ideas.
Brilliant. Thanks, Julie. And Callum?
Yeah, despite my background just now and working in the world of innovation, I have to say that the low-hanging fruit comes from really the attention to detail. When you start thinking about crop production, the best innovation is the spade. You know, understand what's under this ground, understand the soil you're dealing with, understand the nutrient, the pH, the structure, all the rest of it. Timeliness of operations, knowing what you're dealing with, driving variable rate application, and only putting in the resources you need to put where they're needed. When you start thinking about livestock production, the best, apart from the crook, is probably the weigh crate. You know, regularly weigh, understand the growth of your livestock. Think about calving intervals, think about making sure you're getting things right, early detection, early diagnosis of disease, prevention, preferably, of disease in the first place. All of these things is the tightening up and the intensification of management that's going to make a difference to the bottom line. But then ultimately, it's really about embracing the right technology to make all of that work better for you. Whether it's in the cattle court or whether it's in the field, it's the technology that's going to allow you to do that better in a more efficient, timely way. And if that means mitigating against some of the shortfalls in labour that's self-evident across the industry, or the shortfall in the arsenal of chemistry that we've got to control crop diseases, or the challenge of antimicrobial resistance in livestock production, you knowing what's going on because you're managing your business, you know, with the intensity and the passion that we know all our listeners are likely to have, you're going to get more chance of hitting a profitable bottom line.
Absolutely. That's a very, very detailed, Callum, and yeah, obviously coming from your background, where you see successful businesses that have developed and had to do that rigor just by standard of having investors, it is in a very important part of what makes that sector work, isn't it? So the one thing I would add to it is I think it's very short-sighted for a sector that we talk about generations to sometimes look at the low-hanging fruit, and I have seen farms in the past where they've tried to deal too quickly with too many low-hanging fruits, and that's not resulted in an overall strategy. And I think, Callum, it's something that you've said is in terms of look ahead. Some of the most successful farmers that I've spoken to had plans 10 years, 20 years ago that have only now just started to come to fruition, and they've managed to get through that period to then become really successful. And I think that's one of the things that I would certainly pull out. And I think from today's conversation, we've pulled some of those out. So I don't think we have any more questions, and I'm conscious of time. We've got 2 minutes, so I'm going to wrap up unless anybody's got any final thoughts. No. So everybody, thank you very much for your questions. Sorry if we didn't get to ask your question. There's a few in here, and there's a few people that we will follow up afterwards because it sounds like there's some interesting conversations to be had. I think hopefully what you've taken from today's webinar is that working together is a big opportunity for farmers, and that then leads into some of the innovation and R&D opportunities that we have that are focused on the UK, that the Agritech Centres, Innovate UK, and can support with. I think what I would take from what you've said, Ian, is talk to the professionals. As a banker, as too many times I come up against customers where they haven't done that, and it costs a lot of money afterwards. So be proactive. Know what the challenges are, know how you're going to deal with those and some of the risks up front, because that's a fantastic way of sort of planning for that. And then I think, Julie, from yourself is there's a wide range of projects that are supported, and almost there's nothing too crazy, there's nothing too bizarre. So do talk to a financer, Propel or Barclays, whoever you choose to, about what you're looking to do, how you need to structure it, what that investment looks like. And I think I keep coming back to Callum's point is know the detail, know the numbers, have an investment plan, know what you're trying to do. And I think that's one of the ways. There will be many, many more that farms can take control and really have an eye on growth strategies in turbulent times. So thank you very much, everybody, for your time today. I hope you found it an enjoyable session. Thank you so much for your questions. and we shall leave you to enjoy the rest of your evening. Thank you, Callum, Julie, and Ian for attending. It's been fantastic to have you and your input. Good night, everybody.
Thanks, Adam.
Good night. Thank you.